Good morning. Welcome to Stock Market Today. It's Friday, December 11th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. U.S. equities, a bit of a mixed session on Thursday. S&P 500, a little bit weaker, but NASDAQ and small caps move higher. Small caps, big outperformers on the day. At the sector level, industrials, materials, and defensives were the worst performers. Tech outperformed. Energy was the big gainer once again. Treasuries were bid and actually saw improvement after a strong 30-year auction. Dollar lagged the euro, flat on the yen cross. Gold was down 10 bips. WTI crude up 2.8%. Folks, at this point, we've been hitting the desk pretty loudly on energy. So hopefully you've been paying attention. S&P futures this morning, as we get to the desk, though, are down 80 basis points after Asian markets were mixed overnight. South Korea and Hong Kong were higher. Japan down. China was an underperformer. European markets are under pressure and on track for weekly losses. Treasuries are bid across the curve. The dollar is weaker. Dollar just continues to be burned at the stake. Gold is up 20 bips, and WTI crude is little change. Let's kick it off on a Friday where, honestly, I write it at the bottom. Nothing has changed. Nothing. Sometimes things don't change day to day. S&P is pulling back from record highs. We're still wondering if it's a false breakout for the Qs. S&P has support at 360, then 340 below that, 340 being the key. Under 340, we play the slop game, slop and chop. Under 320, the trend is down and you reevaluate your views. It's pretty simple. Over 340, you're playing for 413. On the Qs, those key levels are 280 in the near term. Stay above 280, otherwise we get into the slop and chop. Under 260, the trend is down. You reevaluate your view. For the IWM, 170 key. Between 160 and 170, sloppy. Under 160, the trend is down. You reevaluate your view. I have no idea what's going to happen, right? We know what's going on. We can see that things, from an economic standpoint, there are a lot of puts and takes. You know, we get some positive data points, some negative data points. My base case is still that we are closer to the beginning of a cyclical bull than to the end. It's funny, I was teaching my class the other night. It was the last class of the semester, and we were talking about where we are. And some of the students were asking me, how could I think it's the start of a cyclical bull, given all of the news? I said, bull markets don't start on good news, right? Bull markets end on good news. Bull markets start when the news is dicey at best, usually bad, and there are a lot of non-believers. That was March. Now we've had a big move over the past 9 months. Sentiment in the near term we've talked about is a little frothy, but I still think we're closer to the beginning than the end of a cyclical bull. Let's hit our market in a minute. What are we writing about? Well, stocks are mixed, but small caps continue to lead. EMP joins the energy outperformance trend. Remember, we were talking about services. Then yesterday in my note, we just talked about XLE in general, and now EMP is on board. The IPO window is wide open. Everybody saw DoorDash this week. Everybody saw Airbnb yesterday. It is wide open. There's an ETF that allows you to play that theme. Copper to gold ratio breaks out again, in case you were wondering why growth has started to underperform again this week. And futures are under pressure this morning. Let's take a look at the major indices. Power bar perspective, Dow down 10 bips, 5-1 bulls to bears. S&P unched, 124 to 48 bulls to bears. NASDAQ outperforms, 19 to 10 bulls to bears there. Small caps outperform by more, 814 to 131 bulls to bears. Bonds uptick. Energy, your best group again. 2-1 bulls to bears on the ratio. But drill down, a lot of opportunity within the space. Chaikin Power Bar tells us that small cap stocks and large cap stocks are strongly bullish. Now, speaking of energy, the stock that I'm highlighting today, A little bit on the smaller side, about $1 billion or so cap, a little over $1 billion. World Fuel Services got that look, got that rounding bottom look as it attacks the interim June highs. Power gauge rating turned bullish in November. Trend is strong. Industry is strong. Starting to outperform, and with the intensity of outperformance increasing of late, we can see the overbought, oversold indicator beginning to move higher from an oversold position, all while the stock is under accumulation based on strong shake and money flow readings. So when we kind of line all this up with everything else that we're looking at in the market, with the shifts that we're seeing in energy, this is our stock of the day that you might want to consider if it fits in your portfolio, if you've done the work. Take a look at this opportunity here. Because look at the top of the list, sector movement last 5 days. Look who's at the top. We've talked about it. I mean, at this point, folks, it's why we pay attention to the things we pay attention to on a daily basis. A lot of times I get asked, hey, Dan, how come you have such a structure to your notes? Every day of the week is the same Monday, Tuesday, Wednesday. It's so we can catch these things. It was so we can catch these trends as close to real time as possible. That's why. If you're jumping around all over the place, you miss stuff. Well, we're not doing that, which is why we caught materials in June, July, which is why we caught industrials in August, which is why we caught the banks 2 months ago, and which is why we're catching energy now. And energy is at the top of the list. Fins, healthcare, industrials are your leadership. Materials, not fins. Fins, staples, and tech are middle of the road. Discretionary comms, Utes, and REITs. Your defensives at the bottom of the list. Utes and REITs at the bottom of the list. This is a great board. Great board here again today. Industry in focus, tech services. Now, one of the things that I have been trying to hammer home as well is the fact that this is not just a tech phenomena. Tech is not weak. Mega cap tech is weak on a relative basis, but tech itself is not weak. Go look at an equal weight tech ETF. It traded at a 52-week end all-time high on Wednesday. Past 6 months, NYSE Tech Services has actually been a monster, 25.6% outperformance relative to SPY. Power bar ratio, which measures future potential, is still very strong, 9-to-1 bulls to bears. It's currently ranked number 10. Baidu, AMAT, and Google, all with very bullish or bullish ratings. And check it out. Tell me tech's weak. Tell me tech is weak. Look at that trend. Higher highs, higher lows, textbook definition of an uptrend. I mean, there's so much green on this screen. If this was, if this was a street at night, just be green lights. That's what this looks like. Bullish, outperforming, bullish money flow. Only issue here in the near term is that it's overbought. But don't tell me tech is weak. That's lazy. Tell me mega cap tech is weak on a relative basis. Okay. But don't tell me tech is weak. Plenty of opportunity out there in the tech landscape. XNTK is an ETF that has 9 bullish stocks in it. Maybe you want to drill down on those bullish stocks. Drill down on those bullish stocks. See what the technical structure looks like. Marry the fundamentals and the technicals, and you generate possibly some compelling ideas. Take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Energy at the top of the list. I'm going to start off by saying I am long call options on Oxy. OXY up 9.9% yesterday. Oxy's kind of interesting. Carl Icahn's in there, legendary investor. So always kind of find it interesting to bet with somebody like that. But it's not enough, right? Carl Icahn's been in there for a while. It's only recently that I've come to Oxy for myself because why? Well, because energy's starting to outperform. APA, part of the energy trade as well, up 9.8%. Twitter is, everybody I think has that one stock that gets them. And Twitter is my stock that gets me. I've tried to buy Twitter a handful of times over the past couple of years. I've never made money. I've lost money every time I've tried to buy Twitter. Twitter up 8.4% yesterday. I do not own it. Snapchat announcing a Twitter integration. It's a mental block. I don't even know what it is. I have it. I don't know why. It shouldn't matter, right? It should just be a process. Twitter's my stock. I've never made money trying to own Twitter. Devon Energy goes along for that ride. Whole logic, nothing company specific to send that stock higher by 6% on the day. Loser side of the board, LUMN. Didn't see anything there. Borg Warner, GM, and Ford. A lot of moving parts there as it relates to batteries. BWA, European Commission, some battery regs. Maybe that played into GM and Ford. When I was looking at headlines, that same headline came up under all three names. But for GM and Ford also too, it looks like Toyota is coming out with a solid state EV battery. So maybe that's a competitive data point for GM and Ford. I'm not deep on it. I just was checking headlines, seeing what's kind of moving these stocks, and that's what I came up with. Martin Marietta, MLM, is kind of an interesting name to me. You know, I think if you're interested in the kind of the President-elect Biden infrastructure play, you got to think about names like Vulcan and MLM. I mean, these are materials companies. You don't build roads without their products. Something to keep an eye on, but was down 3.7% yesterday. Let's dive into the charts. Copper, gold, growth, value. You know it. You love it. Last week we showed you this chart because it was bumping its head on that resistance level. Copper to gold, that is. Now we're breaking top side. And as we're breaking top side, look what's happening to the growth value ratio below. It's moving lower. It's rolling over. It's on the verge of breaking down. You have to start to wonder. You have to start to, if we're going to be intellectually honest, we have to start to say that this trend is starting to be a downtrend. And it's playing out as this trend becomes an uptrend. What is the market pricing? It's pricing a better global economy. Copper over gold. Well, if the global growth picture from an economic standpoint is getting better, you probably don't need to pay as big a premium for the growth themes in the equity market. That doesn't mean you don't own them, by the way. It just means maybe they don't outperform to the degree that they did. We have been of the view that taking a balanced approach to equity allocation makes the most sense. A lot of opportunities out there. There's opportunities in energy, banks, capital markets. There's still opportunities in tech and comms. Plenty of opportunities in discretionary. Take a look at Starbucks trading at an all-time high. Look at Disney. Left for dead. Stock's trading up 7% today. There's opportunities everywhere. In the energy space, speaking of, here's E&P getting in gear. XOP, oil and gas, E&P ETF. Not quite above those June highs yet, but you know, grinding there above the 200-day moving average as the RSI shifts to bullish ranges. I think at the very least, you probably have, you know, upside to the June high. But I'm more interested in that relative strength at the bottom as it looks like it's trying to make the turn. Now, again, it could be a head fake. Look at what happened March, April, May, June, right? It ended up being a head fake. Could very well be the same thing this time, right? I'm never going to guarantee you anything. But we have to identify these trends and we have to say to ourselves, I wonder if this makes sense. And you can find the supporting data points, right? The supporting data points should be clear to you, right? If energy was just trying to lift, but that copper to gold ratio was still declining, I'd be suspect of the energy lift. But we connect those dots. You're seeing it around the world as well. Take a look at Brazil, EWZ. It's outperforming the S&P 500. That's got energy exposure. Really interesting what's going on. And as I said, the IPO window is open. Take a look at the Renaissance IPO, ETF, IPO, ticker symbol, how novel. RSI in bullish ranges. It's a massive outperformer relative to the SPY as it trades up here near 52-week highs in a solid trend above a rising 200-day moving average. So, you know, the environment is the environment. You see it, you know it, right? Airbnb prices, it's up more than 100% from the IPO price in its first day of trading. The window's open. We're going to get roadblocks. December is going to be busy until the holidays. Probably pick up in January as well. Just something to keep an eye on. That window is open and it speaks to risk appetite. That's it. Take us for a test drive. Have an amazing weekend. Be well, be safe. I'll be back with you on Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.